China is diving harder into purchasing gold to diversify from the dollar and dollar-denominated assets. Gold makes up 5.53% of Chinese reserves now, higher than the last year's 4.9% and the highest since 2015. It's a trend followed by other central banks who have also been snapping up bullion at record speeds. After witnessing how the West applied dollar restrictions on Russia in 2022, fear of US sanctions first triggered this pattern among central banks, and now Trump is threatening to impose tariffs. China sold a record amount of US Treasury and agency bonds last year. China is moving to diversify away from the American assets as trade tensions persist and to stockpile the gold. The central banks of big countries such as China, India, Russia, Poland, and Japan are on a buying spree in the gold market. For the third consecutive year, gold buying by central banks topped 1,000 tons. In 2024, central banks purchased a record 1,180 tons of gold after buying 1,082 tons in 2022 and 1,037 tons in 2023. Central banks continued their strong interest in gold in January this year. The sustained buying highlights the strategic importance of gold in official reserves, particularly as central banks navigate heightened geopolitical risk. Official gold reserves rose by a further 18 tons in January this year. Gold prices are hitting records daily as concerns that US President Donald Trump's reciprocal tariffs might fuel inflationary pressures and impede economic growth drove safe haven demand. In the previous session, bullion recorded its strongest quarter since 1986, marking one of the most significant upswings in the precious metals history. Before I proceed, I encourage you to like the video and share your views on the topic in the comment section below. Your feedback is invaluable for us and a wider audience around the world. The expectation surrounding the US reciprocal tariffs has prompted market participants to adopt a more cautious approach. Many are reducing their risk exposure and seeking refuge in safe haven gold as a safeguard against potential fluctuations in their portfolios. Markets are paying close attention to the automobile tariffs set to be implemented on April 3rd. Bullion, regarded as a safeguard against geopolitical and economic uncertainty, performs well in an environment characterized by low interest rates. But why are central banks going gaga over gold? Will this buying trend continue in 2025? Gold has always been a reserve asset for global banks, and of late, inflation and geopolitics have emerged as the two main reasons for central banks to accumulate gold. Inflation in post-COVID years led to gold becoming a haven for governments' reserve assets due to uncertainty and unpredictability. With Russia's invasion of Ukraine in 2022, the geopolitical tensions escalating with Israel, China, and Taiwan undergoing varying levels of conflict, the central banks resorted to accumulate gold in large numbers. Will gold prices rise further in 2025? Precious metal surges past $3100 per ounce as markets brace for potential trade war escalating and geopolitical tensions. Analysts predict further gains. Geopolitical uncertainty is high, and President Trump's recent comments on Russia, Iran, and Greenland has contributed to the heightened tension. The gold market is significantly affected by President Donald Trump's planned tariffs, confirmed Tiradesh Sintho Prowangchai, Secretary General of the Gold Traders Association in Thailand, adding that the metal is seen as a safe haven asset. Gold prices have soared to an unprecedented high, surpassing $3,100 per ounce as global markets reach to the looming threat of US tariffs and persistent geopolitical instability. The surge marks one of the most significant rallies in the precious metals history, driven by the confluence of factors that have investors seeking safe haven assets. Also, the prospect of escalating trade tensions coupled with ongoing conflicts in the Middle East and the unresolved Russia-Ukraine situation has created a climate of uncertainty that favors gold. Analysts at Capital Economics believe that central bank purchases driven by gold's safe haven status will continue to push prices higher, potentially exceeding 3,300 US dollars per ounce by the end of 2025. Goldman Sachs has even more bullish forecasts, predicting that prices could reach US dollar 4,200 by year end and US dollar 4,500 by next year. JP Morgan strategists say multiple macro scenarios will likely increase gold prices in 2025. But after a 30% rally in 2024, some investors are skeptical about where demand will come from with prices at all-time high. The key will be from central bank buying and gold exchange traded funds inflows. According to JP Morgan's head of base and precious metals strategy, Gregory Scherer, central banks aren't done with gold yet, with added political uncertainty likely helping to stoke a revival into 2025, he said in a recent note. According to data from the World Gold Council, after dropping in the third quarter of 2024, central bank gold purchases accelerated toward the end of the year, adding 333 tons, 54% higher than the previous year. The People's Bank of China also returned to gold purchases in November 2024 after Trump won the presidential election for the first time since April of last year. Scherer said, with the People's Bank of China buying again and the potential for China's currency to be further devalued with the risk of tariffs, we think gold owning appetite among Chinese consumers could receive a boost too, as investors turn to gold as a real asset store of value. But why are countries reducing their reliance on the dollar? China, Japan, the UK, and other big countries own hundreds of billions worth of US debt and dollar reserves, yet the amount of those holdings has steadily decreased over the years. The latest data shows that the official Chinese holdings of US Treasury bonds have been at their lowest level since 2009. Till 2009, China was increasingly lending to the US government. Now, China realizes it can't reconcile their differences with the current Trump administration, upending international relationships. Foreign investments into US Treasury bonds may well decrease further. China understands that gold is the way forward and safeguards its interests from Trump's tariffs. On the other hand, many countries, including big groups such as BRICS and ASEAN, are trading in local currencies to bypass the SWIFT banking system and stockpiling gold reserves instead of dollars. China and Russia have de-dollarized more than 90% of their bilateral trade and trading in their local currencies, yuan and the ruble. The trade value between China and Russia reached a record high of 240 billion US dollars in 2023, a 26.3% increase from 2022. At an individual level, countries around the world, including China, Russia, India, Iran, Saudi Arabia, UAE, and Brazil, have been moving towards trade in local currencies. Thank you for watching, and don't forget to subscribe to our channel for new videos on important international topics.